Hi, welcome to the TradingRooms Podcast. As always, I'm your host, Raghu Kumar from Rain Platforms. This podcast is sponsored and brought to you by TradingRooms, India's first automated social investing and trading product. TradingRooms is the future of trading. The elevator pitch goes something like this. DIY trading is a very difficult activity for most of us. Most of us have jobs and other commitments which really prevent us from actively participating with the stock markets in an engaged manner. TradingRooms solves this pain point. With TradingRooms, you can discover and subscribe to expert traders and investors by subscribing to their rooms. Some rooms are free and many are not. Some are trading only equities and others are trading derivatives. Some are doing discretionary trading and others are doing algorithmic trading. We're also launching cryptocurrencies very soon. So we are basically introducing automated trading to the masses because when you subscribe to a room on TradingRooms, the trades are automatically taken on your mapped brokerage account, and we're integrated with more than a dozen brokers in India. You also have the option of taking the trades in a one-click execution manner. To learn more about TradingRooms, check out www.tradingrooms.in. Now, let me introduce you to our guest for today. We are lucky to have Manu Bhatia join us today. Manu is someone I've gotten to know a little bit over the past year. I invited him as a guest to a live webinar that we hosted a few months ago on the topic of active trading versus active investing. And of course, Manu was from the active trading camp. Manu's story is very interesting. He is actually a graduate of IIT Kanpur, obtaining his BTech in chemical engineering. But he got inspired by trading and started building his own trading systems. However, post-IIT, he didn't become a full-time trader right away. He spent almost 5 years in the corporate world, first at TCS and then at Flipkart. Finally, he decided to take the plunge around 5 years ago and switched full-time into trading. Manu has a very active presence on Twitter, where he has almost 200,000 followers. But unlike trader personalities, Manu is quite straight-edged. In fact, he is so straight-edged that he actually transparently posts his annual profitability figures on Twitter. So if there's one controversial aspect to Manu Bhatia, this may be it, which we will also discuss today. Since he's also a full-time systems trader, we will also try to understand how he thinks and how he builds his trading system. So it's an honor for me to interview Manu Bhatia. So Manu, welcome to the podcast.
Thanks, Raghu, for having me. It's an honor for me as well to be talking to you for this podcast.
Thank you. Thank you so much. Manu, I thought we could start with your general background to trading. I know I introduced you and I, mentioned, IIT Kanpur and your corporate world experience, but if you can kind of tell me in your own words, kind of generally how you got into trading, that'd be great.
Sure. So during my college days, I used to see my brother trading, based on what he heard on television or based on some news flow. So that got me interested. As a student, during that age, it was like a problem for me, which was not very easy to crack. So that really got me fascinated that, okay, here's a challenge for you. How do you predict or sort of make money in the markets? Right. So that fascination led me to get into it, learn more about it. So I did not have much money during that time as a student. So I used to make virtual dummy portfolios on websites just to track how my logics or how my strategies. I didn't know what a strategy was back then, but it was more like what I'm doing with the logic that I have in my mind, is that working or not? So I used to put down my trades, look at the log after a while, and then one thing leads to another. As you know, once you get into this, it really sucks you in. So that's how the journey started, and kept on learning by failing, basically by setbacks and by failures. I constantly kept on learning. So, and yeah, it's been a good journey so far.
Yeah, very interesting journey, I would say as well. I love what you said there. You fail, you have your setbacks, and then you just pick yourself back up and you keep at it, right? Let's talk about your schooling experience, because I think this is very interesting. You are basically a chemical engineer. You were supposed to become a chemical engineering, I should say, and you obtained your BTech from IIT Kanpur in chemical engineering, and yet you became a trader. So, a couple questions there. How did you make that switch, right, from IIT Kanpur, getting a BTech in chemical engineering to becoming a trader? And B, how do you think your stint at IIT Kanpur actually helped you become a better trader?
Sure. So I think once you get into IIT, that is when you start exploring what your real interests are. I feel a lot of people get into it just because it's a good place to be in, right? We study a lot and try to get those marks and grades to clear the entrance examinations to get in. But once you get in, you get to meet many seniors, you get to interact with a lot of alumni of the institute, and then you understand, okay, there's a lot in the world, and based on your interests, you should sort of pursue that. I met a lot of my seniors who had done chemical engineering but were working in a banking company or in a analytics company. Also, some were in coding jobs. So that, I mean, it opens up your mind. It makes you believe that, okay, there is something called following what you are interested in, right? Following your passion, or at least seeking to know what it is. So that really helped me. I mean, if I think about it, if I were at some other place, maybe this would have not been that trivial to me, as trivial it was when I was in IIT Kanpur. The other thing that really helped was chemical engineering as a syllabus. It's not that heavy compared to, let's say, mechanical engineering or a civil engineering. So I used to get a decent amount of time to explore the markets, and people around me as well. I would see people in my wing, in my batch. Probably a person from electrical engineering is more focused on some drama acting kind of a thing rather than the electrical engineering. So that the atmosphere was like that. You did your studies, you had to do that, but along with that, you were free to pursue whatever your interests were, and there were ample examples around you, ample people around you who would help you for that as well.
Sure, yeah. And I think that's really important, right? Finding something else to kind of whether it's a hobby or trading or whatever it is, to kind of give you a sense of balance as you go through, a rigorous course like, at IIT. Now, you also mentioned in the Money Control article, which we will reference in the description of the episode, that you used to observe your older brother trade, right? This is very intriguing to me. I wanted to know just a few things here. What was his trading style, and how is it different than yours? And how do you think that also helped you down the road?
Right. So he used to basically trade on news flow. If there's a news coming in, or looking at the television, what the experts have to say. This is that his trading decisions were made. And I used to follow him, what he's doing, not very actively, but yeah, I mean, whenever I was back home on a holiday, I used to check in, like, how's it going? So what I realized was, over a period of time, it was mostly flattish. It was not like huge profits or huge losses. It was mostly flat. So that got me thinking that like, even the experts on television are not able to give you away. So that the question that came to mind, that the question that got ignited was, how do you predict the markets in an accurate manner? Right? And this was a very important question, because this led me to later, come to the realization that prediction is not something that you want to get into. It's mostly how you want to react to the markets is what is really important. So yeah, his trading style was basically looking at the news flow and taking decisions basis what the experts have to say. But I decided to sort of uh, uh, like take a new path, which I did not know there's something called technical analysis or fundamental analysis or quant analysis. Uh, but I thought that, okay, there has to be some method to this madness that I need to crack. And that is what later on led me to become a system trader eventually.
Sure. I love what you said over there, in terms of moving away from trying to predict the markets to realizing that it's more about a reaction game, right? I think most of us intuitively, when we are introduced to the stock markets, we think about predicting. It's when you make that shift, a certain light bulb goes off in the head. So let's also talk about, Flipkart and TCS, right? Because I do want to talk about all that. And the reason I want to talk about all this is because for any listeners out there, right, who have a job in the corporate world, which is going to be the vast majority of listeners, you should not get discouraged, right? It should not be that you are necessarily not, spending that time trading, because all these things can actually help you become a better trader. But I wanted to ask you if that's true. Do you think by working at TCS and Flipkart, and also why did he do that? Because in that same article, the Money Control article, you actually generated a 24% return during a 1-year sabbatical after IIT Kanpur. And then he decided to actually go into the corporate world, and he spent 5 years there. So just walk me through all of that. Why did he decide to enter the corporate world? And eventually, how did he become a full-time trader?
Sure. So after completing my graduation, I first joined TCS. Was there for about 6 to 8 months. And so the learning from that job was that I, I used to code there, bits of codes here and there, mostly in VBA, Excel VBA. And when I look back, at that time, I did not feel like, okay, what is it that I'm doing? Is nothing so important as such. But if I look back and then I realized that, okay, that coding, the basic bits helped me sort of, uh, uh, learn a few things about coding and how to, do basic decision making, basic backtesting, which really helped me. It helps me till date. I'm not a very proficient coder, but I can uh, like do some basic back testing. If I have some ideas, I'm able to sort of back test and do some basic data analysis. So that is where it helped me a lot. My stint at TCS. Post TCS, I had joined Flipkart, where I was primarily into supply chain management, which was again very different. Uh, it was analytics, and it moved to supply chain management, fulfillment. Being a startup, whatever work is there, you have to sort of do that. Uh, so I was doing pretty well in Flipkart, and after about 1.5 year, I decided to take a sabbatical, what you referred.
Oh, okay.
Right?
So that's what happened. Okay. Mm-hmm.
Correct. So the idea at that time was that you have to take the risk right now, because later on in life, you want to settle down, you want to be a bit more stable. So let's take that risk right now. And so I said to myself, I'll take a 1-year sabbatical, and if I'm able to match my salary, what I'm drawing right now, I'll continue doing what the trading bit that I'm doing. Otherwise, I go back to working. And after that 1 year, my purpose was not that huge money wise. So obviously a 24% return, although it's pretty decent, it did not make it in terms of what I was expecting. And I also felt that there were a lot of missing links that I still needed to sort of find. So that is when I decided to sort of go back to Flipkart and spend some time there, build on my corpus, as well as in the background work on the various skills required to be a proper full-time trader. And being in Flipkart was wonderful. I mean, I loved what I did there. It was fantastic. It was a growing company. It still is a growing company.
Yeah.
But the growth back then was very
amazing. Yeah. Yeah.
So we were working like anything, and it really taught me like how do you scale things, because everything that we used to do, we make a process and then 6 months down the line that's not working anymore. So you have to go back to the drawing board and think about something different. So this, I think, now that I'm talking about it, it makes me feel that it helped me think slightly from a futuristic point of view. Like if I'm trying to deploy something today, I don't think that, okay, it's working today, so it's great. I think what will it do probably 1 year down the line, 2 years down the line. So that was a big learning in Flipkart for me, how to sort of scale things, and that not directly but indirectly, the kind of mindset it brings gets you into it sort of helped me in trading.
I can probably attest to that, except the other side, because I've actually never worked in the corporate world, but all my co-founders that I've worked with always did, and like you said, you realize when you have not worked in the corporate world, you think in a very utopian way, right? You assume everything is just going to get done in a certain way, and you don't think in a very process-driven way. So that's a skill you lack, I would say, right? But then the flip side is also true, right? You also want the mindset of being able to say, hey, I'm going to do this today and I will accomplish it tomorrow. So it's a weird yin and yang that you need. But I find that very interesting. So now let's shift gears and talk about trading, right? When I was researching you've posted a few times on Quora. I don't think you posted very much. And in one of the answers, you talked about risk management, and you talked about how one should never risk more than 1 or 2% of their capital on any trade, right? And I think you wrote that about 3 years ago. So my question there is, why 1 to 2%, right? And basically, do you still believe in that now?
So there's a basic philosophy behind it. Like, let's say a system that we are trading generally will have an accuracy between 40% to 60%. Majority of the systems, like 80% of the systems, will be in this range. So let's assume a 50% accuracy, and in a 50% accuracy, it's very much possible to get around 10 losing trades in a row. I mean, there is a possibility if you're trading, let's say 500, doing 500 trades, once in 500 trades, or maybe a couple of times, you'll definitely get a losing streak, which will be 10 trades in a row. There'll be losses. There'll be winners as well, but on the other side, there'll be losses as well. So if someone is probably taking a risk of let's say 5% of their capital in a particular trade, then in a 10 trade losing streak, it will be a very difficult situation psychologically that they'll be in. Half of the capital is gone, and then to run the system going forward becomes a huge challenge. You just lose the confidence in the system. And I've seen this with so many people. It happened with me as well initially, that you backtest something and you find that, okay, this is working fantastic. Let's put in a lot of money and get rich quick. But that's a very dangerous thing to do. More often than not, what will happen is initial 2-3 trades, 5 trades, you'll do well, and after maybe a month or so, you'll get that losing streak, and that is when you sort of lose confidence. And then, although it might be a very good system, you might not be able to trade it any further. You would say that, okay, this has stopped working, let me hop on to something else. So this system hopping happens just because we do not keep our risk parameters in check. On the other hand, if you imagine someone taking a 1% risk, it's fine. I mean, 10 losing trades, 10% drawdown is very much digestible compared to a higher RPT. I've seen people taking RPT of risk per trade of as high as 10% of their capital. Now that will just like wipe you off. It's just a matter of time.
It's a matter of time, yeah.
3 months, 6 months that you'll hit that streak, and then all the money that you've earned or all the good research or the backtesting that you've done is going to go out. So that's why I think, 90% of risk management for a retail trader like me can be summarized in this one line, what you mentioned, right? Do not risk more than 1% or max 2% of your capital in a single trade. If you do this, you'll remain in the game long enough. And if you remain in the game long enough, eventually you'll end up doing well.
Sure. So one question I have here is, how does one actually determine whether that should be 1% or 2%? And maybe, associated with that question is, what is that trade-off between like a win-loss ratio and risk per trade, right? Like, are those two things like, obviously, if you're running a system with like, let's say a 90% win-loss ratio, how does that affect the risk per trade? And basically, how does one actually determine that number?
The way I look at it is, I look at the success percentage of the system. If the success percentage is relatively higher, then we know that, okay, what is the maximum possible losing streak? Like, for example, I don't remember the exact number, but let's say for a 70% accuracy system, the maximum losing streak is around 5 or 6 trades, right? Okay. So in that case, if I'm comfortable with a 20% drawdown, then for a 7 trade losing streak, I can even go for a 2.5% risk per trade or a 3%. So two factors that will define this is, one is what is the success percentage, and the second one is what is the max drawdown limit that I want to live with for a given system.
Sure. Yeah, makes sense.
So that's why I say, like, let's say the other effect of this is, if you have a higher RPT percentage, you'll be able to compound faster, because every time your capital grows, you're risking more on that. So the compounding effect is more profound in such cases. And the best example in this case is option buying versus option selling. Option buying, you'll generally get around 30 to 40% success rate, and option selling upwards of probably 65%, 70%.
Yeah.
So in the option selling system, we can probably do a 2%, 2.5% RPT. That will suit us well. But in an option buying system where the accuracy is 30%, it could be very dangerous to do a 2% RPT, because you'll get maybe probably a 15 trade losing streak or a 20 trade losing streak. So there the RPT has to be low.
Sure. My next question has to do with position sizing, right? So in one of your interviews, you talked about how, one component you didn't have early on in your trading career was you were not thinking about position sizing properly, right? And eventually, I think something changed, so I'd love to know what is it that changed, right? And maybe you can talk about position sizing a little bit as well.
Yeah, so the missing link that I referred to earlier, right? When I took a sabbatical, I had backtested, I think, more than 100 systems. Whatever ideas I could get, I would frame rules and backtest them. And still, I was not able to sort of get the results I wanted. So there was definitely a few missing links there. And what you mentioned right now was the biggest one of them. Like, how do you position size correctly? Earlier, what I was doing was, for whatever be the stop loss, bigger or smaller, I was taking the same position size. Now, the problem with this approach is that my risk for each trade is different.
Right.
But why should I have a different risk for each trade if the outcome is not known? Because every trade, I don't know whether it's going to be a profitable trade or a losing trade, and I also don't know what is the probability of it being a positive trade or a negative trade. So what eventually struck me was that this is a big problem, because at times in systems what happens is, let's say you're trading 1,000 quantity, uh, you're selling a 1,000 quantity monthly option at let's say 400 premium, with a 50% stop loss. So the stop loss is 200 points, and the target is obviously it expires OTM.
Right.
So the risk in this case becomes 2 lakh rupees, 1,000 into 200, right? But a similar trade system throws wherein my entry point is 200 points, shorting at 200 points, same 50% stop loss. So the stop loss this time is 100 points, and the target is 200 points, right? So here my loss, if I take the same position size, is going to be 1 lakh rupees. So in the first trade, the max loss is 2 lakh. Second trade, it's 1 lakh. Now I don't know which trade is going to make me money, and if it so happens that the first one sort of hits the stop loss and the second one gives me a profit, I'll be break even,
Sure.
because
Yeah.
I would have lost 2 lakhs there and then made 2 lakhs here. But
Right.
originally the thought process was that reward to risk has to be 2:1, right?
Right. Right.
Because I was taking a 50% stop loss. So this piece is what I realized, that the risk per trade has to be same for all the trades in a given system. And if you make the risk per trade same, then that is how you cannot change your stop loss, because that is defined by the system. So the only variable that we can play around with is the position size.
Right.
So in the first case that I mentioned, my position size will be, instead of 1,000, I'll take a 500 quantity position size.
Right.
And in the second case, it will remain at 1,000. So the risk per trade in both the cases will be 1 lakh.
Sure. Yeah. No, I think this is, basically hits the nail on the head, right? Because you need to combine proper risk management with proper position sizing, right? And obviously you need a good system on top of that and good execution protocols and all that. But when it comes to the actual system, when you're using good risk management and good position sizing, then you're giving yourself an opportunity to succeed, basically. So I find that very interesting. Now let's talk about, this is something I referenced earlier, the fact that you actually showcase your profits on Twitter and things like that. Now, there's a big phenomenon of a lot of traders doing that, posting screenshots, and which I have my suspicions on. I don't completely subscribe to that line of thinking, but when it comes to showcasing like your annual profits and things like that, that's something you do, right? Would love to know, Manu, if you can maybe quickly walk us through, how have you actually performed, since you are very open about this? What have your MTM numbers kind of been like over the years? And also, I'm going to ask you straight up, like, why do you do that? Why do you actually showcase your profitability numbers?
Sure. So I'm going to take the second question first. Like,
sure.
Why did I started posting? So back in the day when I started posting, there were not many people actually. Like right now, if you see, it's sort of flooded with all these people sharing their screenshots. So the idea that I had at the time was, see, when I told you, right, I took a sabbatical, and during that time, whoever I met, almost like 100% of the people that I met and told them, or we talked about it, that I've quit my job, I've taken a sabbatical to do trading. There was a lot of negative feedback that I got, right? Because probably because of their previous experience in the markets, and they were all well wishers. They were just trying to warn me, sort of, that this is difficult. And one question that used to mostly come was, tell me one person who's made money in the markets, right? And that question also somewhere hit me, that okay, that's the truth. I don't know a single person in real life who's made money in the markets by trading. investing, we had good number of examples around us, but by trading, I could not find. So there was a point in my journey wherein I myself had this question whether money can be made by trading or not. At that time on social media, we did not have access to, now there are a lot of good traders here, but then at the time it was a very big question. And there was a time when I actually found a person. There was a forum called TraderG, and through that I came across a trader and we started talking. And then I sort of, after the interactions, I got to know, okay, trading is a profitable thing, and that changed my mindset a lot. Now I knew that it was possible, and now I had to do it. Like, it is the skill set that I need to acquire to be able to achieve that.
Sure.
That was a very important point in my journey wherein I got that belief that something is possible. And that is one of the reasons I started posting the screenshots and my how my journey progressed, because I thought, I mean, there would be hundreds and thousands of people who want to get into trading and they're struggling with the same thing.
Sure.
They've been asked the same question, like, tell me one person who is actually making some money by trading in the markets. So at least they'll have someone to point to that, okay, you look at that guy, he's doing all right. So that was one of the reasons that I thought it is important that I share my journey. And it was also to document in a way that, okay, how the progress is being made. And if you ask me, it's something that everyone has a different take on, which is fine. But for me, it's about getting motivated or getting inspired and believing what is possible. So I remember when I was doing 4 lakhs on an average. I mean, I used to be very happy if I made a profit of 3 lakhs, 4 lakhs intraday. It used to be a super day for me. And my mind was blocked. I mean, it was blocked in the sense that, okay, this is super good. Now you don't need to do anything else in life. This is happening for you. Awesome. But then I came across people, there were more people who started posting, and I could see people posting screenshots of 15 lakhs, 20 lakhs, 25 lakhs. Now this sort of, I could take it the other way as well, that, okay, there are a lot of negative emotions that can be taken out of that as well. But the way I thought about it was, dude, you are doing this, but there's another level up. And this is also possible. Now you need to figure out how to get there. It will not happen overnight. Definitely the systems you have, how you scale them. If they're not scalable, try and understand what the other person is doing. Right. That is how I moved from equity intraday to options, because initially in the first couple of years I was mostly doing equity intraday. That is where my profits were coming from. But beyond the point, it was not scalable. I had to move to something more liquid. So that switch also happened because I got that motivation from somewhere or inspiration from somewhere. So I feel both these things, right? That it's a very healthy thing if you take it that way.
100%.
And the second part was how the PNL has been. I think I started with a very not a very huge capital, around 4 lakhs, 5 lakh rupees. Was my trading capital. Rest, whatever money I had taken like 30 to 40% of that. And I said, okay, this I'm going to deploy into trading, and rest I'll keep as a backup. So that is what I started with. I think back in 17, I guess. So 17, 18 was, I think, very good for me. Made around 600% plus in the financial year. So that was phenomenal. And So I used to take as much leverage as I could get. Back then, in Share Khan, there used to be something called trade, wherein you could get 10x leverage. So I use that to max whenever possible. So at that time, so that year around 600% plus. Then this was 17, 18. 18, 19 was a similar thing, around 5x from the initial capital. So 500% there. And 1920 was a bit tough because this was the year when I made the switch from equity intraday to getting into options and futures. So the first part of 1920, I had mostly a flattish kind of an year because what I was doing in equity intraday was giving me a lot of slippages. So most of my edge was I was not able to realize the edge because of the higher quantities and higher slippage.
Sure.
It took me around 6 months to transition. Then I was looking for something else. So options was the talk of the town back then. So it took me around 6 months to sort of switch. And 1920, I was able to do around 70% plus. That too, mostly towards the second half. I think March was very, very good because we got a lot of volatility. 2021 was a game changer for me personally. I think I did around 16x that year.
Wow.
Yeah, because first, I mean, it was mostly about whatever I was doing, it was working out. I also started a discretionary book, and that worked out phenomenally well, much, much better than I could have imagined. And 21, 22 financial year was mostly consolidation. I think I would have done around 100%.
Wow. Okay. Still amazing. Yeah. And what is the capital that you're trading with?
Right now?
Yeah.
Not very. I think I'll skip that piece.
Sure. That's fine. Yeah, no worries. So now let's talk about your strategies. I mean, there's a lot of things that we can talk about over here, right? How generally have your strategies evolved over the years? I know it's a very general question, but based on the landscape and based on the types of strategies, you mentioned equities to options trading. Any other major shifts in either your approach or what you trade or things like that? What have been the major kind of changes over the years when it comes to your strategies?
So the initial few years, I would say the initial 2 years, it was mostly equity intraday that I was doing. And the reason for that was to sort of increase my capital as fast as possible, because the kind of leverage that we used to get now, it's capped at 4x, but earlier we could have gotten a 10x leverage as well. So that was the max leverage that you could have gotten in any instrument. And there were many trades to do as well. So a system that really worked for me was taking a whole lot of trades and with high leverage, assuming that, okay, even if you get a few jackpots every month, you do really well. So that was the approach back then, the first couple of years. Then because of the position sizing or the quantities that I was trading, equity intraday became a bit difficult, because the earlier I could trade almost 80 to 90 stocks. That basket came down to 15, 20 stocks. So then I looked at various options, like can I do futures positional? Should I do options? So options appealed to me because it's fast action, and the weeklies came in also. So weeklies had come in earlier, but
right,
I started doing it back then. So the weekly options were a very good proposition. and combined with the leverage, it was giving me something similar to what I had in equity intraday. So,
wow. Okay.
So that was the area that I focused on then, along with doing some. So now the corpus had also grown. So I also thought that, okay, let me also get into a bit of investments. If I am able to do 20 plus CAGR over a long term, maybe 10-20 year horizon, then that will be fantastic. And on top of that, anyways, I can pledge my holdings and get margins and use that to trade. So that thought process came in, that you do investments, and that is also, by the way, completely system based.
Okay.
And on top of that, you do options.
Got it.
Now, while I was doing that, I realized that because there's a lot of screen time. I mostly put in my trades manually and look at charts. So I felt that there are a lot of things that I'm missing out on. There are some obvious trades which I'm not able to capitalize on, because the system is not giving that trade. System will
sure
work on only a few set of parameters. It cannot be a very complex thing, right? So that is when the idea came in, that let me start a discretionary book, which was very difficult, especially because one thing that had worked for me till now was being a systemic trader. Every time I had in the prior years, whenever I had tried doing discretionary, I had failed. But this time I thought, okay, let's give it another shot. Maybe all the screen time has sort of helped. So I took a part of my capital and started my discretionary book. And that was also the primary thing in that book, was that the RPT thing has to stay. The risk per trade that we discussed earlier, right? That cannot change. Everything else, how you take positions, how you trail your profits, or where you take your stop loss, everything is can be played around with, but the risk per trade is the sacrosanct thing that cannot be changed.
Sure.
So that was the another sort of getting into this discretionary bit was another major change in style, I would say. But this helped me a lot in capturing some of the things which I might have missed out on.
Sure.
Right. So that's now the approach wise. One thing has also changed in the last year and this year is the focus on drawdowns. So earlier I used to be okay with bigger drawdowns because I wanted to grow my capital really fast. So that was okay. I mean, I've had drawdowns of 30% plus multiple times, but now I feel the max that I want to cap it at is maybe 10%. And now the question that comes to my mind is, how do I keep my returns similar and reduce my drawdowns further? So how do I maximize my returns to drawdown ratio, basically?
Sure. I mean, that's the golden question, right? But so a lot to take away from that. One thing I do want to ask really quickly, right? Because generally I noticed that our listeners and just traders in general, they will fall under one of two camps, right? The discretionary camp and the systematic camp, right? And that can be like a very big topic for a debate, right, in itself. But you actually started off as a systems trader, and then at some point in time, you decided to open up your own discretionary book, right? Which is very fascinating to me. So one thing you mentioned is because of all the screen time that you were getting, you think that maybe that is helping you make that decision, right? I want to kind of follow up on that, because do you think that's generally true for someone who spends a lot of time looking at screens and looking at their monitors and looking at charts and things like that? do you think that gives them an edge with discretionary trading? And also, how is your approach with discretionary trading different than systematic trading?
Yeah, as you said, this is a very contradictory thing to be doing, like being on both the sides. What I generally feel is a person should always start off as a systematic trader, because the chances or the odds of success of making money is through systematic trading to begin with, right? I do believe that if you are monitoring things on and off, if you're like having a screen time of 5 hours, 6 hours a day over a 5 year, 6 year period, uh, there is some, uh, you know, what do I say? Uh, I'm not getting the right word. There is some memory that is formed uh, in the brain, right? That it's not a, there's no proper structure to it, but there is some memories which are formed. I know traders, a lot of traders who would remember that generally on a Friday, this is how the weekly option premium opens on Friday morning, right? And if it is significantly different from that, then they will take some action, right? Maybe it's higher, then they might want to sort of short it. Maybe it's lower, then they might want to do a debit spread or something of that sort. So that is again coming in from the years of experience that they've seen those premiums. Same goes for price action. If you look at price action over a period of time, you tend to form a memory of it. And these are not standalone events. These are like multiple 3 4 things that happen, like whenever a particular news flow comes and this price action happens, generally this is the outcome,
Right.
right? When that happens 4 5 6 times, and then the seventh time, your system will not give you that signal, but you would know that, okay, there's a probability of this happening. So that is, I mean, that is the reason I say that discretionary, if someone wants to try it out, they should do it probably 5 years after doing systematic and
Sure.
watching having some basic screen time.
Sure.
And there was a follow-up question.
No. So I think that's fine. And basically, one thing I want to mention here very quickly is I find that very interesting that you say that. Usually, for most participants, it's the other way around, right? They actually start off as discretionary traders. They spend a lot of time trying to figure out the markets, trading in a discretionary style, oftentimes losing money. And then at some point in time, they're like, wait, there's systematic trading, let me check it out. What you're saying is it's the opposite. And I completely agree with you here completely, because I think when you are trading in a systematic manner, you're basically eliminating all the subjectivity. But like you said, right, when you're spending all that time doing anything in life, whether it's screen time or, playing an instrument or whatever it is, any sort of activity you do over and over again, you're going to get better and better at. And ultimately, the markets are all about patterns, right? And being able to detect and spot patterns. So I completely agree with you. Let's change gears a little bit. How do you spend a typical day?
I mostly work from home, except for Wednesdays and Thursdays where I go to the office. Typically, I'm not a morning person, so I'll get up like half an hour, 1 hour before the markets open, and just get myself together for the market opening. Uh, Probably the opening half an hour, 1 hour is a bit can be a bit hectic, because you have to form your views and take your positions. After that, it's mostly sometimes it's like demanding, but mostly it's easy going. So for the next few hours, I mean, I would be watching screen passively, probably listening to songs, or even if I have like if there are not many big positions, I'll also do some cooking. If the time permits. And then again, towards the closing of the session, you have to be on the screen looking at how things are working out. I have a small team who helps me with the execution. So coordinating with them happens, like whatever is happening with the positions, I get to know, and then we take decisions accordingly, especially in the discretionary setup.
Sure.
Post market hours, I mostly try to relax, probably go for a walk in the evening, just get out of home, right?
Yeah.
And play with my daughter. She's 1 year old, so as much time as I can devote in the evenings, that is for her. And then probably have dinner, again go out for a walk or for a drive. Just probably late at night, I would want to do some research. So whenever I'm in that phase where I'm working on some new systems, or there's an idea that I really like, I want to sort of work on, then that I probably end up doing towards the night time, when it's quiet and easy, you do not have any distractions. Yeah, that's what a typical day is. Like nothing fancy over there.
I think a lot of traders have similar lifestyles. Actually, they tend to do a lot of research and deeper thinking late at night. At least the ones I've spoken to, they're usually not morning people, and they have some sort of activities that they can balance. Great. So also, Manu, obviously a lot of our listeners are newcomers to trading, or they're generally, more of an amateur compared to you. From your experience in the markets, what are some major mistakes that a lot of retail investors and traders make generally?
First mistake is to, they dive right in without having the proper basic understanding of the markets. Whatever instrument you're thinking of trading, you should have complete, at least the basic knowledge around it, right? If someone is getting into options, they should know what are the basic option strategies, how does the options expire, uh, the basics of what is options Greek. You don't need to go deep into it, but you should have a basic understanding at least, right?
Yeah.
So that's one thing. I mean, if you're getting into equities, same thing applies. How the deliveries happen, how do you exit or enter. So there along with the basic knowledge, you should also have some basic strategy that you want to go ahead with, because otherwise you'll end up doing a lot of different things, not being able to make out what works, what does not work. And I know as a beginner, I've done this mistake. You spend years and years just to figure out that one simple strategy that you could have done earlier. So always enter the market with basic knowledge, a basic strategy in place. Doesn't matter if the strategy does not work out. At least by the end of it, you would know that this thing does not work, which is also very important in the markets to know. Third is, obviously, when you're doing the strategy, it should be done with a proper risk management, having the right risk management, which also includes position sizing. So I think these three aspects are very important, and also having the right goals in mind. One has to understand that there's a learning curve. It's more like a marathon rather than a sprint. It'll take time to sort of reach where you want to reach, and being realistic about it helps you be in the game for longer. If you're unrealistic, then you'll probably get disheartened after a few setbacks or failures.
Sure. Yeah. So to quickly summarize that, number one is getting a proper understanding of what you're trading. Number two, keeping it basic, keeping it simple. Number three, proper risk management, position sizing. And number four, having a clear kind of an end goal, right? And I think maybe, I guess, again, connecting the dots, maybe your stint at Flipkart is actually helping you over there because you're able to kind of think about things in a more process-driven manner. So, amazing interview, Manu. I think I personally learned a lot. I've been following you for a while now on Twitter, and, you are definitely an inspiration to me and to many traders out there. And I think a lot of our listeners are really going to enjoy this interview. Last question I have for you. This is what I ask all my guests. Where do you see yourself in 5 to 10 years?
That's a tough question, Raghu. So the way I think about it is, there has to be some basic planning that has to go into where you want to be. I think in my current state, I'm looking at 1 year at a time. If I'm able to do whatever I'm doing for another year, I think it'll be great. And you never know, you cannot plan that. That's what I firmly believe, because the more you plan, the more you get thrown off things. So just go with the flow, have some basic idea of where you want to be 1 year from now. And so that's what I feel. And eventually, if you have to go a few levels up, that happens automatically. If you're doing that 1 year right, then it accumulates over a period of time.
Sure. That's really funny. To this question, I get all sorts of different answers. Some people will have very direct answers saying, yes, in 5 years, I want to manage this much money, or I want to have this much CAGR. And others will have answers like you, but
I used to be the first one, what you mentioned, right? That I would have very well-defined goals. But the more stringent I became about it, the more I realized that it's only going to increase your dissatisfaction over a period of time. Because somewhere in the mind, you've visualized yourself that I'm going to be there. And if you're not there, then it becomes difficult to digest at times, especially for people who are competitive. So it's a healthy thing. I mean, to have to not take it too seriously, or not to plan in a very serious manner.
No, so whatever you're doing is definitely working. So, all the more to you. And thank you so much.